Hello, everyone. I'm Joe Darlene with First Close and the Mortgage Technology and Marketing Committee Chairmanship here at our group. And so today I'd like to welcome to our webinar. We're going to have an awesome webinar today. We're transforming the borrower engagement through strategy, process, and automation. And I'm very excited to share this with you today. So we have some great guests, and I'll introduce them in a second. But before we start, I want to thank Mortgage Media and our MTAM committee sponsors today, which is Tavant. So Tavant FinLeads, a Salesforce-based customer acquisition and engagement platform, is a one-stop solution for marketers and loan officers and enterprise business lending model. It empowers customers to create a one universal workspace for loan officers and an intuitive, collaborative, and engage borrowers through the mortgage application journey. Leveraging FinLeads has enabled early adopters to improve sales productivity, increase per loan origination application rate by 30% in the first 3 months. The solution connects over 120 third-party data and service providers. These include connectors that consolidate leads with a myriad of sources that improve the loan application conversion by pulling data from credit, income, employment, and asset providers. FinLeads enables an omni-channel experience so loan officers are able to engage with customers online through email, text, and chat, and providing the ability for loan officers to stay in touch with borrowers throughout in complex and financial transactions. Now, our topic today, ladies and gentlemen, it's transforming borrowers' engagement through strategy, process, and automation. So it's my thrill and honor to introduce you to Josh Friend, the CEO of Insellerate. I also like to introduce, he has a couple guests here today, and his the first one is John Kresevic. I got it. Sir. He's the president of JFQ Lending, and also from what I understand, a quite a neat fintech investor too as well. Also with us is Nick Rutherford. He's the director of business development at McGlone, which is a pretty well-known mortgage company there. So by the way of some background, this production is a mortgage technology and marketing committee. It's very important for us to put these on for you all. And so this committee was formed to support the development and dissemination of new technologies and marketing strategies that the mortgage industry needs and wants to embrace. We go through this. Please submit your questions. I will direct them at the end through the right, so you can go through the Q&A panel to give us your questions. We'll open it up at that time. So let's kick this off and let's get this thing going. Go ahead, Josh, and take it away.
Hey, Joe, really appreciate it. Really excited to be here. I have Nick Rutherford, as you mentioned, and John Kresevic, both partners and clients of ours. Really excited for both of you guys to be here. And one we're going to talk about is just strategy, process, and borrower engagement and the kind of the culture behind it. And I picked both of these groups because both of these companies have a very high level of commitment to process and strategy. And it's one of those what I would call super users of our platform, which is, if I hear about them on a weekly basis, they're talking to our tech team, refining things. So I know they're definitely inside the platform, but just overall in their overall business. So as we start, I think it would be good to highlight both lenders. First, let's start with Nick. Nick is at McGlone Group, and which is also part of Homestead. So just kind of give a little, just to give the market who is listening a background. What's the volume as a whole do you guys produce? What's your guys' monthly, yearly volume? What size lender are you guys currently, Nick?
Yeah, so I think this year is a little unique for all of us, and those volume numbers have definitely spiked. Traditionally, we're a little bit over $1 billion closed on the retail side, and then we crossed half a billion on the CD side last year. So that was a big watershed moment for us. This year we're already over combined 1.2 billion closed, close to 2 billion written, already over the $500 million on the CD side. So volumes are definitely spiking up, which is why I think things like this are important. As that volume gets heavier, using that technology in your business is going to become paramount.
John, you guys, I did a feature on you about a month ago, but your guys' volume, I think also maybe tell us, where did you start 2 years ago and where are you today?
We opened August of 2017. We were all consumer direct. Last year we funded just over $2 billion. We're pacing for somewhere north of $4.5 to $5 billion this year, all consumer direct.
Yeah, they've definitely have grown with the platform, and they're definitely in process. So all you guys are listening, understand both these groups are very successful at what they do, and they are leveraging technology to do that. And I think one of the things I want to talk about in that is just to start with, it's just kind of the culture. You know, both the organizations have this strategy and culture of a refinement and everything. But, you know, John, how did, you know, what does that culture mean to you? And you know, how are you instilling that culture? And just from a executive level, how do you get the staff to follow that, or what does it look like?
So for us, we start with everybody talk about is elite, right? So everybody's first day they go through orientation, and for us, we give a part of our presentation. We talk about Ferrari in Italy, and we talk about in Italy, in the town where Ferraris are made. Everybody walks around with a Ferrari jacket on. You know, people in the town that don't work for Ferrari, like, I wish I could work for Ferrari. I want to have that jacket one day, right? And so we talk about being elite, and then from the top down, what happens is we create a, you know, everybody talks about the catchy word culture, right? But for us, we take it one step further in that refining the process. You know, we try and get a Ford model. So we do one thing, we do it really well over and over and over and over and over again, and then refine that process, right, from start to finish. So it really starts from everybody's first day they started the organization, and then from there we kind of just seep it down in everything that they do and just try and refine it over and over.
That makes sense. Nick, now your organization is slightly different because you have retail and consumer direct, and also John can sit in the seat, and I know John doesn't wield the power like, hey, my way or the highway. He definitely gets input from his team, but he has influence. And Nick, obviously, you have a lot of influence with your group as well. But how does that culture permeate within your organization with retail and consumer direct? Because you have some competing needs sometimes, and also how do you find it you're able to bring that culture to the organization?
Yeah, I think that we probably have the same end goal that John does, and we probably just go about it in maybe a slightly different manner. So when we bring on our technology, I like to kind of find technology that fits with our current culture and then find ways to use it and highlight and accentuate our strengths. And I think really a lot of our retail culture has seeped into our CD group, which is really probably more of a hybrid than a lot of other CD groups. We do a lot of purchase volume, might have maybe a slightly longer loan cycle than most. So it's really kind of about how do you fit those pieces in to really accentuate what you do well, or maybe highlight some deficiencies and use the technology to kind of close that gap.
Like that. I like the idea of accentuating what you do well, right? I think just in general, as a philosophy, whether it's your company or your employees, you know, I've been an employer for 18 years now, and I learned very early on, if you want to do well, focus on what your employees do best, not what they do the worst, right? And if you can focus on their best, highest use, then you as a company usually get the best, highest use out of them. So that's actually really good. That's really good input. One of the questions that, you know, I think lenders to have when they're looking at this, right? So obviously lenders have record pipelines. Now, minus the lenders who had that capital call and crunch, but they're still now minus, you know, that capital call we had 90 days ago, 60 days ago. Take that little blip out of there. Lenders have the most cash they've had, right? Their balance sheets are up. I've talked to a lender this morning, who one of our clients who said they had razor thin balance sheets during that hedge call, but now they're more capital than they've ever had. You know, just in 60 days, how quickly that just changed. And so some lenders are like, well, I'm just making so much money, I don't really need to do anything, or more importantly, I don't even know how to do something, because this is a very complex process. And a lot of these lenders out there have all these net branches and divergent people, loan officers doing all these different things. So how do you start this process? Now, you know, John, I've worked on with you guys on this. So how did you kind of really start this process? What did you do first to even begin to understand that this is the journey of the process? What was your kind of first step there?
Our first step, my partner and I, we actually went to Home Depot and we went and bought 2 whiteboards. We bought a hammer and some nails, took it to my house. I told my wife our guest bedroom was now known as the idea room, right? And so we hung up these 2 large whiteboards that took up the entire wall, and we just started writing ideas down. And then from the ideas, we called it our long list. We'd write 30, 40, 50 things down, then we'd refine it. And once we refined it, then we go ahead and erase the entire thing. And we realized the further that we got, right, we just took that process to start the company. But then when we started the company, we said, okay, how do we scale this? And for us to scale it, we always went back to the whiteboard. And so we took our entire call flow and we wanted to say, okay, which lead goes to which loan officer? And then through Insellerate, this is where you guys came into play. I still remember I flew, I don't think we paid for it. We were a startup. You guys were gracious enough to foot the bill. You guys flew out to Arizona where we're located, and I think it was Scott Roberts on your team.
Yep.
We whiteboarded out the entire call flow we wanted to have, but then where that lead went. So we talked to a client on Monday. Did it become a loan? Did it become a submission? If it didn't, how does it reroute over here? And then if it doesn't get called within X amount of time, let's circle it back to this person. And so where we're at now is we just rolled out, we want to do $1 billion in volume by the end of next year funding, right? $1 billion per month. And so the only way we're going to get there is we have to keep refining that process. And that's actually what we're doing right now with the executive team, is figuring out how do we pick up all the quote unquote low hanging fruit, because we spend a lot in marketing dollars, and our loan officers have a buffet mentality where, they work this lead a little bit, then it's too difficult, so they're going to go work this one instead. So we're going to recapture all that through the platform that you guys have and continue to whiteboard everything out and then put it on paper from there.
Yeah. And then I like that, the whiteboard. I do remember the whiteboard sessions. It's something I've been doing for a long time. Nick, and I'll talk a little about that, but I know, Nick, how do you guys, how do you visualize this with your organization? Because you do have 2 groups, so there's a slightly different workflow. What's your approach to, visualizing this to start with?
Yeah, so I replace the whiteboard with an Excel spreadsheet. I'm a data guy. So where I started was really, dig into past data, try to find trends, try to find patterns, some that you like, some that you don't like, and then kind of figure out how you want to try to improve whatever numbers those might be. Maybe it's the amount of calls a loan officer is making for John, or the timing of those calls, and really having a transparent system to get really good, reliable data out was always my main goal. Let's get the data as tight as we possibly can to try to figure out how each loan officer, maybe somebody struggles on making this call on time or making that call, or they struggle with a follow-up call when they've contacted someone. And then you can really start training and sort of refining. And we like to get a lot of input from the group. I like to talk directly to loan officers, processors, whoever's going to be involved, because I feel like they know the problems better than I'm ever going to know them. I think I can identify some areas, but then go right to the source. How can we use this to help you? It is really a lot of how we drive that decision making. And I mean, on the CD side, it's obviously much different goal than on the retail side. So you're trying to use a system that really we kind of picked for CD because you're more engaged in CRM, but also then find something that can do some things for your retail group as well, where instead of the power dialing, they can use some of the organizational functions or some of the other things, some of the marketing automation to really give them the same lift in a different manner.
Yeah, that's good. So first, I think for all the people listening, one of the things I take away from this is it sounds like you guys all did a lot of just like brainstorming on spreadsheets or paper or whiteboards, and you just got it on somewhere so you could look at it. So what I would tell lenders is, a good way to do it is just get the whiteboard, like John said, or use Excel spreadsheet and document it all. I like the whiteboard. I actually like the draw. Draw step 1, lead, then contact it, not contact it, application, no application, approved, not approved, in the process and not in the process, and rewrite the loan, all those workflows. Then you can just look at it and go, oh, here's all this stuff. Now, once we see all this, right? So first is you have to identify, you go to the doctors before they prescribe something, you have to figure out what's wrong. You have to do a checkup and look at it all, right? So we've done all this, we've prescribed it all, we put it on the paper, we put it on the board. Now the question is, doctors looking for things. What, you have a temperature, but what are you guys looking for when you did this? Like, what's the approach? Because I could put it on the board and there could be a million things you can improve, right? So what do you look for? Just to find, what are the areas you're looking at right now to improve? John, what do you go after?
For us right now, our philosophy is what can be tracked can be measured, what can be measured can be improved, right? So going back to what Nick was talking about is looking at past data trends. One of our big pieces of tech that we use is Domo. So Domo allows us to build out APIs with Insellerate, with Encompass, and we can see with our call center, right, our call data, and figure out all those things that Nick just talked about. And so we've tried to narrow it down to what we believe is the most important. First is, lead to credit. How many phone calls does my loan officer get to pull a credit report? Because I'm a very big believer in if you pull more credit reports, you're going to write more loans. You can't write a loan without a credit report, right? So we put all of our trainings for our first couple months for a loan officer is based off of lead to credit. Are you branding properly? Are you digging deep on goals? Are you making sure that you are having a foreshadow that tells the client why they want to work with themselves in JFQ Lending? Are you talking about our A+ rating in the Better Business Bureau, right? So all of our trainings the first 2 months are on lead to credit, and then you go a little bit further. So then we want to say, okay, let's go ahead and look at credit to setup and then setup to submission, right? Setup for us is application taken. And so by measuring those 3 pieces of the front end of the funnel, we can pretty much extrapolate out what the back end is going to look like based on our lead type, right? Like FHA Streamline is going to pull through at X percentage, conventional loan is going to pull off at Y percentage. So if we focus on those first 3 things, lead to credit, credit to setup, and then credit to application, application to submission, we can have the back end kind of take care of itself. And just setting up those training pieces are where we really focus a lot of our attention for our loan officers.
And I think John, you said it. What you can read, forget how you said it, but you can refine or what the term you use. But I think what you just said was, I think it's critical for a lot of lenders out there. They can't read this stuff. They don't have access to the data, and I think that's so I think that's a big point to point out. Using a platform like us, that we're able to give you all the data. There's a report in our platform, but I know you guys have additional drill downs, and you guys do this at an extensive level, which makes it easy for us to give you the data. But the point is, they have the data. Like, that's important. Most lenders don't track the data, and you're tracking, just so people understand, both of you guys, both your companies, you're tracking the consumer from the initial hand raise. As soon as that person raises their hand, whether they call you, submit something online, whether they talk to you in person, and then you put them into the platform, the minute you have a borrower, a customer, you're tracking them and engaging them. Most lenders don't have that. There's lenders, they got paper and names on it. They're not there, and there's stacks of people to call back. That maybe your top loan officer, that's effective because that's why they're the top loan officer, but the rest of them just don't do that. So I think that tracking part is huge. And then Nick, when you're doing this, what are the areas you're looking to fix in this process? It's on the board. You've written it down. What are you going after? What are you looking for?
I think we look at, basically the same metrics that John does. We name them a little bit differently, but I think that it's really important not to just look at that end of the funnel. You can look at closed volume and you can pat yourself on the back, but I think it's important to understand the journey. How did you get there? What percentage are you converting? Because you're probably not going to make a ton of difference on the back end, but you can look and identify areas in the front end. And one thing that we always say is we probably don't have any more home runs at the size that we're at. We're not going to turn on Josh. We're not going to turn on a lead source and all of a sudden start doing 100 billion. So look for little things that you can stack on top of each other that make a really big difference. If you can have a piece of marketing automation that gets you an open rate of an additional 1% or 2%, that's all going to kind of funnel down to exactly what John was talking about. Increase those hand raises, increase those credit pulls in whatever way, affect it by 0.5% here, 0.5% there, and that's going to funnel down to the back end. So look for constantly making those little tweaks and refinements. They're going to help boost those kind of front of funnel numbers.
Yeah, just a real quick, I love what Nick just said. One of the biggest eye-opening moments for us is we were very early in our inception, and we realized, like, oh my gosh, we're not even answering the phone 35 times a week. I've got 5 loan officers. I'm missing 7 phone calls a loan officer. And so just finding that number through Insellerate for us, how many times that each loan officer answers the phone was eye-opening, because you can see Billy over here answers 5 calls a day and Sally is at 15. If they've got the same close number, well, I got to figure out, how do I get Sally to take less calls so she can convert better, and how do I get Jimmy, or whatever his name was, to take more calls because he's a better converter, right? So Nick, you hit the nail on the head right there.
Yeah, that was such a great point, John, and I think that's something that we've preached organization-wide, from sales down to operations. Is the most important thing you can do if you're thinking about getting into technology or getting into data is understand what your baselines are from an organizational perspective, from a person-to-person perspective, because when you understand what people's capacity are, what they're doing, and then what you expect, that can really help layer on different things or some culture changes or some training or whatever you might have to do to kind of solve those problems.
Yeah, I think you both are saying the same thing, but those are excellent for our group here today. This is really invaluable feedback for the team. And I just want to say that, one of the things, John, you said, what you can track and then what you can improve. That's awesome. Are you guys, just a quick question, are you guys running in this type of stage early in the process? Are you doing a hard pull or are you doing a soft pull credit?
We do a hard pull. The reason that we do it that way is I want, like, my goal from a first call for a consumer is I want as many opportunities for you to tell me why you're not doing this so I can address that before I give you the information, right?
Yeah.
So as soon as I tell you 30-year fixed rate is at 2.99 or 2.875% today, now the client or the consumer has all the power, right? But if
Sure.
and I learned this is a side story. My wife and I went to Morocco right before we opened the company. It was the last thing that we did. And we were in the bazaar, and it's miles and miles long, and you can't see the sun. There's so many shops, and they're all the same thing. So we went into a shoe store, and the gentleman said, "Hey, sit down, have some tea." I'm like, "All right, we'll have some tea." Then he pulls out his phone. And he goes, "Here's my grandkids. Where are you? Here's my grandson. Here's my granddaughter. Here's other pictures of my family." And then he tells us his assistant, "Hey, bring us some whatever it was, some food." And he's like, "Where are you from?" "We're from Arizona." "Are you here on your honeymoon?" Before I knew it, I was 30 minutes talking with this guy about his family and my family, where I grew up, where he grew up. And then he says, "Hey, let's talk about these shoes over here." So what he was doing is he was pulling the sales process and taking me down the funnel. And we have that same philosophy. The more time we invest with a client before we give them the information they want, which in this case was the pair of shoes that I was looking at, right? The more invested the client's going to be, and they're not going to want to go look at other lenders if you provide great service and a great price all in one. And that's kind of where that idea comes from.
You're not gonna.
I would say I like that a lot, John. You know, my experience is, you know, I was in the mortgage business, running call centers for years. And just to your point, and the stats back that up. Like the CFPB did a study in 2016, which I use this stat a lot because I think it's just so telling. That in 2016, they were trying to find out how consumers bought mortgages to see if the market was competitive. And they found out that 79% of the people that did a loan in 2016 took one application with one lender, which is mind-boggling. People don't shop. So if I can take your time, build a relationship, get your information, why would you? I talk to you and I spend an hour and a half on the phone with you. When Sally calls you from XYZ Mortgage Company and basically has the same thing to tell me, why would I want to spend another hour and a half talking to Sally to hear the same thing? Right. So that's a really good point. Like, get that information, build that relationship. If they invest time, if they invest their time, which I think is great. I know that a lot of lenders try to do early in the funnel too, is get some kind of paperwork from them. Get them to sign a disclosure, send over a something, because if they invest time, money, anything, then they're way more committed to the transaction. So that's really, so we're looking at, what I'm hearing is we're laying out, and what I'm really getting from you guys is we're really looking at data and the data numbers, right? So once you've looked at the data numbers, and I think this kind of goes along with this next thing, is what do you fix first? And so I'm hearing, you know, the gates. You guys measure the gates, which I always think is the great thing. You should measure all your sales gates. Lead to call, call to connect, connection to credit, credit to disclosure, disclosures to submission to processing, and then your back end pull through, right? So those are all these gates that you need to measure. So as you're managing this process, what do you guys, because you could attack anything. You know, Nick, I'm going to kind of throw something out there, and I think this is true with you guys as well. Most of our lenders who have come to our platform that were using something else have said that they quickly saw higher responses from email, and and that was like an easy thing, that our platform is getting a lot more open rates because the way we send out the data and the way we manage it, that we're getting way more inbox, way more open rates. So that was like a real easy, like, lift, low hanging fruit. Really didn't take anything work from you guys other than finding the different way to send out emails that got inbox more. So what do you know, Nick, what do you look at once you find all this, you look at it? What are the things that you're attacking now, or did you attack over the last 6 months? Where did you spend time to refine this process?
I mean, the email thing is great, and this is good for anybody who's listening that maybe you're not deep into technology, you're thinking about getting into it without doing anything. So we were a Velocify client. We sent all of our emails out of our own Homestead Funding SendGrid account. We switched over to Insellerate. We're using Josh's SendGrid account. We had a 3% better deliverability rate right off the bat without doing anything. We just changed SendGrid accounts. They've done some work on their side to make sure that emails aren't getting blocked. Instant 3% without getting into all of the data and the refining that I think John and I both love to do. That's 3% out of the gate. And then also, I mean, maybe my favorite thing when we first got on Insellerate is just the organizational capacity, I think made a really big difference. We have a gentleman from actually our Arizona branch who's one of our highest producers, and he was a Velocify client, came over and he goes, I don't like this thing. I don't like this priority view. It's not how I'm used to doing it. And this is a huge producer, so I'm trying to keep him happy. So I said, Jared, just do me a favor. Just try it. I've spent, almost a year building this system. Josh has spent countless years building this system. Just try it. We've set it up for you. We've set it up for our organization. Do it. So he goes, okay, for you, I'll try it. I'll give it a couple weeks. 2 weeks into it, he goes, I'm making every phone call. I'm never missing an opportunity. I'm setting follow-ups. Because one person you can only be as good as a human can be, right? If you're keeping things down on your own calendar or on a notepad or whatever it is, you're going to miss some opportunities. And, with Insellerate, we've been able to kind of customize exactly how we want those calls to be made and where your highest impact calls are going to be made. So if you can't get through the entire list, at least you're getting to the top 75% of calls you should be made. And I think it's really making a big difference in conversion numbers.
Yeah, it sounds like so communication is like low-hanging fruit. And John, what about you guys? I have thoughts on this, but where low-hanging fruit have you seen in your process that you guys have attacked?
I think it's all low-hanging fruit, simply because of where the market is right now. But for us, it's our follow-up game is terrible. I mean, I'll be the first to admit it. That's mostly my fault. My strategy since day one has been to overspend on marketing to make sure my loan officers were too busy, because I use my marketing spend as my recruitment budget, right? So if my loan officers are doing phenomenal, they're enrolling the most clients have ever enrolled, they're busy, they're happy, well, they're going to go tell everybody else how great it is to work at JFQ Lending, and we were able to grow very quickly that way. The downside of that is we have not preached follow-up very well. This is my fault. I take full responsibility of this. And so we've gone so far down the path that, trying to manually get loan officers to make X amount of dials or to make X amount of emails. So the nice thing is we now built out with you guys that automation piece where we've got the engagement platform set up where it'll auto, it does the loan officers, not their job for them, but what the engagement platform will do is it's going to drive things back to them versus the loan officer going and manually doing it. And so for us, what we're now doing is I'm building out a full-on follow-up team where I'm going to have a group of loan officers that don't take any inbound calls. All they're going to work is the meat that's left on the bone, the low-hanging fruit, the clients that we should have given better attention to on Monday and Tuesday, that the loan officer just got too busy because the phone rings so much, right? And so we're going to have a full-on team that only goes in the background and works those follow-up leads. A wise person once told me a loan officer is like water and electricity. They're always going to take the path of least resistance, right? So if I got to make outbound dials or I can just wait for my phone to ring again, I'm just going to wait for the phone to ring. So you got to kind of, specialize as a lender and as an owner if you're trying to get the most bang for your buck and make sure that your loan officers are working, to their best ability. It's give them one task. And Nick, I think you talked about this. You guys do a lot of purchase business. What I found is my folks that do some purchase and some conventional and some FHA, they don't do as much as if they focus on just one thing. So you do just conventional, you guys do just FHA, you're just a purchase group, right? And if you specialize that, you can get a nice pickup there, coupled with the automation piece that Insellerate put in place for us.
Yeah, I like that. One of the things that it sounds like from both of you guys are saying is, if I can use an analogy, first it's communication and talking to someone, right? So a baseball player can't hit more home runs. You want to get him to hit more home runs? First, he's got to get better at batting. Second, you got to get him in the batter box more often. You got to get up the plate, right? So get your loan officers great at what they do, but what you're saying is that's fantastic, but now I got to get you in the batter's box over and over again. If I want you to hit a home run, you can't hit a home run in the dugout, right? Waiting for a phone call, waiting for someone to call you. There's no home runs happening, in the dugout. So how do you get them in the batter's box more? So I think what I'm hearing, and I can just tell you from a previously been a lender and doing this at the level we do, we manage. Last June, it was 50,000 borrower applications. That was a year ago. We've more than doubled in size since a year. So I don't know what the number is now. I need to ask my team. It's probably closer to 100,000 or more monthly applications for our platform. What I've seen was what you both said. What I heard from you was automating some communication, or just it's a contact game. Low hanging fruit is getting those people in front of your loan officers more often. Right? That's like the lowest hanging fruit is, you can do all these. You can give someone, you can teach them how to do how to sell differently. You can say, here's a shelf, here's how you do a rebuttal, here's all these different things you can leave behinds, the takeaways. There's 1,000 different sales techniques. But the truth of it is, it sounds like the lowest hanging fruit is just get someone on the phone or face to face or communicate with the loan officer, and you get business, especially now since the rates are so low. Right? We're at it. Lenders are at a capacity. There's more loans to be refinanced right now than there's capacity to refinance them. There's more loans to be refinanced now than there's capacity to refinance them in the next 12 months. So it is a contact sport, a low-hanging fruit of just, it sounds like communication. For those people who are listening, think about that communication. Anyone you've ever talked to, everyone you've ever seen, that's valuable data. Those are people that would want to interact with you again. So how do you stay in front of them? How do you stay top of their mind? How do you stay in all the different locations that they're at? Which is one of the reasons why, you know, we built Insellerate, which is let's automate all those processes. Nick, you had mentioned, and I remember the loan officer you were talking about, that turn on the system. I know that he's one of the big proponents now. Whenever I talk to your sales teams, that he loves the platform because he jumped in it and used it. And that was, you know, that organizational thing is great to tell the loan officer how to contact, call, stay in front of people. But then the second part is the engagement. Hey, let's stay in front of them on email, text messages, ring his voicemail, phone calls, Facebook ads. That engagement is like, that's the lowest hanging fruit. I can tell you from our side what we see. We roll this technology out for lenders. These lenders make their money back the first 30 days. They're going to pay for their system in 30 days, the first 30 days, just because they're doing 100 loans a month. They put the system on, and in the first month they got 15 more loans. You extrapolate that benefit, and, you know, in 30 days they've all of a sudden got loans that they wouldn't have had otherwise. They're now making more money. That's just one of the ways we help lenders make money. But really, so the big low hanging fruit I'm hearing is communication. And just kind of summing this up with all of you, you know, just when you're looking at the technology needs and technology partners, what is it that you're, you know, looking for in your partners, and how do you approach that? Nick, start with you. How did you approach that, and, you know, what do you look for?
Yeah, so I think it's really important for me, no matter what piece of technology that we bring on, that I think either your point person, you know, in your case, working with you, Josh, the CEO of the company, shares your vision for the industry and your vision for growth. Because I feel like that alignment is really going to help you get to your goals a lot quicker, because you're going to be working on your end to do all of the things that we probably want. So we're going to give you some suggestions, some things that we might want in the platform. But those are things that you guys are already trying to build internally to improve your platform, because we're aligned in contact strategy. We're aligned in what might be the next new technology to integrate into the system and how we're going to use it. So really, it makes it so there's no contentious conversations. We're not coming to you with ideas that you would never want to build. You're not trying to charge us a ton of money to build something that you don't really want in your platform. We actually had a call, it was about a week or two ago, where I was asking you about something. I thought that I had a great idea. I said, hey, let me call Josh. Josh, let's do X, Y, or Z. And he goes, yeah, that's in our sprint. We already have it on the roadmap. It's already coming. So it's nice to have a partner that's anticipating your needs, because it takes a lot off of your plate. Because, you know, John and I, we probably don't have the time to think of every little nuance, every little thing we'd like to have done. So it really helps when your partner is thinking about, you know, your best interests.
That's good. I like that, John. And what was your approach in this?
For me, it starts with, like, I'm not a very patient person. My executive team knows that. It's probably my worst attribute. I'm a mortgage guy, right? Like, I want to drive production. I want to lead people. I want to high five people. I want to celebrate wins. So for me, the first piece goes back to communication. I don't like waiting 4, 5, 6, 10 hours, you know, for a response. And when we first opened as a company, my partner and I kept looking at each other. Like, we would send emails and voicemails like, hey, we've got our credit card. We're a company. We have actual corporate Amex. We want to pay you for your service. It would take 2 days to get somebody to call us back to accept payment, right? And so now, you know, and you and I have gotten to know each other, but even before we knew each other, I would text you and get a response immediately. So for me, that's the first thing, is how quickly does somebody respond? Because I move quickly, right? And I need somebody else that can match that need to move quickly. And then the second piece, Nick touched on it, it really is, are you guys filling a need that I have? And can you really grow with us in size and scale? Because we've grown so quickly. You know, what's been good with your team is that you guys have added more pieces to give us support. You know, now I talk with you, I talk with Scott, I talk with Nathan, I talk with your brother, because we've grown so quickly. I need to make sure that our tech partners have the ability to do that as well, because you never want to outdistance what your technology company or your platform can do, right? Because if that's the case, then why do you need them? You might as well just build a bunch of developers in-house. So those are my two big things: is can they scale with us, because our plans are getting big, and then can they communicate quickly, effectively, and really the other thing is, do I like you? Right? I'm gonna, whether it's myself or now my CAO is gonna deal with you guys. Like, we have to like you, because this is a partnership. I look at not just Insellerate, but our phone platform, Encompass, the people we talk to there. You know, we have to like the people you work with, because if you do, they're gonna go bend over backwards. They're gonna answer the phone on a Saturday night They're going to do a sprint for you that they might not normally have in there, and just building those bonds together really strengthens that relationship.
Yeah, that's important. So I'm going to kind of wrap it all up, and then I know we're going to open for a couple of questions we have out there. There's a lot of good information. We probably could, do this for 3 hours, and lenders would be very happy to listen to all this stuff, because both of you guys have, tremendous experience and have done great things. What your companies are doing right now in the marketplace just, I think, tells what you guys have been able to do. But just kind of putting it all together, the culture, so you have to have a commitment to culture of improvement. That's kind of the step one is, if you want to do more, you're either growing or you're dying. You're either improving the company or the company's getting old, right? You're either technology's getting better, it's getting worse. Is that constant improvement, that culture of improvement. It's just how to know where to start first, putting it on paper. You need systems to tell you the data, right? So you need a system like Insellerate that actually can interact with all your platforms. I mean, I know for you, John, we interact with a handful of your platforms. We interact with your Domo, with your phone system, probably 2 phone systems, I believe, or at least now it's been, I think, 3 phone systems. Thank you. 3 phone systems, database, and Compass, and probably some other stuff. And Nick, I think we're doing something very similar to you. And then we have some lenders we interact with that, plus a servicing platform, plus all these different things. So it's having that ability to see the data, right? I guess that's a big thing. And I didn't really think about that at the beginning of this talk, but from hearing both of you, yeah, you have to see the data. Have to see the data so you can read, react, and report, and you can, what you can measure, you can improve. I really like that. It's really just putting it all together. And then the final, part of it is just, once you do all this, now I'll let, either both of you can say your 2 cents on it. Once this is done once, what happens then? Do you go home and sit down and, drink pina coladas at the beach, or once you refine the process, what do you do next? Nick, what's your next process? Once it's done, what do you do?
So I mean, I guess it's probably never done, right? Especially with how quickly mortgage technology has grown over the past 5 years. It's never done. I mean, we love your platform. I hope that we're an Insellerate customer for the rest of our lifetime. But that doesn't mean I'm not going to take calls at other CRMs or other tech companies. I think you always need to keep yourself abreast of what's out there, what's on the forefront, because it might not be an entire system. You might not do a demo of a CRM and say, hey, that's better than this system, that's better than that system. But you can say, I really love this one thing they're doing. That's new, that's different. I haven't seen that before. And if you're constantly looking and trying to upgrade, you're going to find ways to make all of your technology work together. You're going to maybe take some ideas back to Josh, some things that they can build. Try to aggregate from as many different sources as you can and find what those little things are that might really help your organization.
Right. John, thoughts?
I think it starts really with, you got to get, if you're the ownership group or if you have the ear of the ownership group, you got to get the okay to spend money. Because if you really want to grow and scale, you got to spend money, right? You can't be afraid of that. And I think the second piece of that is you got to be able to go recruit folks. I'm not the strongest tech, and I love data. I run off of metrics, but I have way better people than me that are doing what Nick's doing and saying, here's where we need to go, or let's pull this lever here. And if you can do those 2 things where you're okay to spend, knowing it's going to a good place, hopefully, right? And then you're out and you're recruiting elite talent to surround yourself with, you never stop. Once you think you've got it figured out, then you can just, like as Nick alluded to earlier, 0.5% here, 0.25% there, 1% there. Well, as you're adding more and more bodies, right, 0.5% of $1 million is not that much. But if you're doing $1 billion a month in volume, 0.5% is a big, big number. And if you can improve that early on and you keep refining it over and over, I think Nick said they got a 3% increase in email open rates. I mean, that is unbelievable if you can extrapolate and scale that out. So tying all those things together, it's a never-ending process is what it ends up coming down to. And that's welcome to the mortgage business. That's why we do what we do and we love it, right?
That's right. And that was kind of the plan I was making for everyone's listening. You do this process and then you do it again. And then you do the process and then you start back at the beginning and you do it again, because either, as Nick said, the technology is always changing. John, you said that the market's always dynamic, and there's always somewhere we can improve upon. And I will tell you, if you can improve pull through by 2 or 3%, if you can improve conversion by like 1% of, like, if you're a consumer direct, you're buying leads, 1% increase in conversion is a massively drastic lift in profitability. Because those last, what you have to understand for the lenders out there, let's say you're just do a number, you're doing 100 loans and you increase in productivity and also now you're doing 105 loans. Those last 5 loans, let's say your average loan you make $2,000 on, those last 5 loans, you don't make just 2,000, you make like full boat on those minus commission. Because those are all additional incremental business. You've already had your sunk cost, right? In the first 100 and your first profit margin. So all those incremental loans isn't just, hey, I'm doing 100 loans, make $100,000 loans, so now I make $100,000 this month. I did 105 loans, so I make 105,000. No, it's I did 105 loans. I went from making 100,000 to making like 145,000. Right? That last incremental lift winds up being huge numbers. And hey, listen, everyone that's out there, know the data, read, react, so you can actually extrapolate the benefit and find out what you can do and, you know, run it out 12 months, 18 months, see what 3% lift does. It's huge. It's a massive amount to the bottom line. I thank both of you guys for being here. I know Joe, you'll take it back over if there's any questions, and you can help us wrap up.
Yeah, great. One of the questions that did come in, guys, great presentation. Great job, Josh. I think that's really important too. And I think one of the things that John brought up was this idea room. That's awesome. Great feedback for folks into this space themselves and trying to figure out what they can do. But one of the things is that did you came in survey to do any kind of improvement for your loan officers or educational pieces? Do you survey clients after they're done? After you had a loan officer on a call for 30 minutes, do you send them a survey afterwards or something and see how that went? Or what are you doing to help train your frontline employees?
Yeah, so one of the things that we did is every closing, part of our actual closing package is a survey for the client. Okay. We want them to rate us on our service, on our communication. Do they like it? Who they refer to us, right? And we actually placed at the very top. So when they go to close a loan, the very first document that they'll see is not the 1003, for example, or loan estimate. It's the JFQ survey. And for us, the reason we do that is, you know, like if you look online, we've got really solid reviews. I think it's 2,500 5-star reviews. But then the second piece is that there's a couple upset clients, right? So my partner and I, up until probably 2 months ago, we personally called every one of those to figure out where we went wrong and how we could have done better to try and make the process and the experience better. Because if you're not tracking things with your clients, you know, that's a huge inch of, and you find stuff out. Like, you know, Billy, the loan officer, didn't call me back for 2 days. Well, that doesn't fly at our company, right? You know, we have a 24-hour rule. You got a phone call, a text, or a voicemail from a client. You've got 24 hours to reply to that because you have to deliver an elite level of client service, right? We start from the top down with that elite concept. And if you can't be elite, you can't work here. And I want our clients to tell us that.
Yeah. Nick, a question for you came in. You know, congratulations on your recent success on your consumer direct side. Is there any channel conflict on your side? Do the outside branch employees, not in the call center, also can participate in Insellerate if they want or not? Or how's that work?
Yeah, so it's kind of funny how it all started. I started vetting technology, and Insellerate Sales Boomerang is a great partner of ours, strictly for the CD side, because that's the side of the business I know. It's the side of the business I spend the majority of my time in. But then anything we're buying on the CD side, we have extensive conversations with the retail side. Is this something you can use, and in what manner would you like to use it? And I think oddly enough, every piece of technology we've purchased in the last year to 18 months, we've also adopted for the retail side. We might use it a little differently, but Insellerate, Sales Boomerang, and we're a simple Nexus client as well, started as maybe CD ideas, but then I think that they also have a very big impact on the retail side as well.
Right. Okay, great. And a question came in for you, Josh. The question is that do you primarily work with call centers? And the question really came from an originator who said he doesn't have the type of sales management like Nick and John. What can he do to participate and leverage your service?
So to answer first, our roots were consumer direct. You know, that was, you know, from the original, just because the company, the software was originally built for myself over 10 years ago with People's Bank. So I was part of People's Bank, an early person with People's Bank, in about 2011. We moved a mortgage company. We invested and bought some stock in the bank and helped them grow the bank. We originally built the software for that to manage all of our lead flow. As time has grown on, and Nick's a great example. Nick has far more retail users of a platform than he has consumer direct users of the platform.
Wow.
So These lines of CRM, lead management, market automation, and retail consumer direct, those are kind of, those lines are blurring now. They're not as spread apart anymore. I mean,
Right.
most retail loan officers understand the value of engagement, staying in front of your customers, and also the platform, it communicates to real estate agents. You can report on your partners, you can co-market with your partners. So it has all the retail function, it has retail functionality as well. So
right.
it works with both it works on both sides.
Yeah, you Josh, today, thank you so much for putting this together, because you really didn't product dump on your product or anything else. And I think our people in this committee really appreciate that. And I think that'll get you a lot of play later on for sure. But just to back to you again one more time, you know, this other question came in and it said basically, if you don't need to have a whole company's direction to sign up with you, you will deal with individual groups or branches should they want to come on.
Yeah, we have a minimum size though. So I mean,
Okay.
we do have a minimum size. It's 10 loan officers and up. So
okay, great.
Yeah, so it's not individual one person shops. It's going to be 10 and up, and we can handle that. Just because of the scale of what our platform is, that's what makes the most sense.
Okay, great. There's a question that came in with you, John. I know you must do a lot of high fives with the volume production that you're doing and everything else. But is that your primary focus for motivation for your employees in business development, or are you doing other things to motivate your employees leveraging the same kind of technology?
We're a big contest. You know, every mortgage world runs contests. I like to run big ass contests. Sorry for my language. I apologize. You know, I get these ideas in my head and I just go and nobody can tell me no. So the most recent large contest we did is I sent 4 loan officers to the Super Bowl. Like, I've never been to a Super Bowl, the one that was in Miami. And you know, the way that we did it is Nick and I were talking about the metrics. So we pulled up metrics we wanted to see improved, right? In this case, it was set up to folder and then number of folders. Folder for us is submission. So track it, you had to have a certain amount of production for production to qualify, and you had to have a certain amount of minimum conversion piece to get there. And we need raffle tickets. So the top guys always win every contest. So I want to have everybody get a chance to get there. And it was a great contest because everybody's like, the Super Bowl, I've never been to one, right? And so we ran it for about a month and a half. And then right now I'm doing something as well. Like, I'm doing a $15,000 bonus for anybody that gets X amount of conventional loan production, because rates are so low. I want to push that product right now, right? And same concept, if you do X amount of production, you're going to get 1 raffle ticket. And I'm going to pull out 3 lucky winners. They're going to get this massive prize. And what it does is, the bigger the prize, my goal is to do big numbers, but people like that. It gives them a reason to come into the day. We do silly stuff, like we do Easter egg hunts, write a loan, find an Easter egg. It's got a prize in there, like your leader buys you lunch, or there's some are bad, like you buy a processor lunch. You know, we've done deal or no deal online. Every credit pull you have, we actually play the deal or no deal game, where if we get the $1 million prize, everybody gets to leave at 2 o'clock, right? So we've done wiffle ball before, we've done sprint races outside. We've got arcades in the office. So, you know, I like to partake in NFL Blitz. I am the office champion. Some would dispute that, right? But just keeping it fun. I mean, if you look around our office, I've got about 45 jerseys hung up and framed. So I let each loan officer pick their favorite athlete. We frame the jersey up. Just keeping it fun for people, and you break up the day with different stuff. It's a great way to high five people, right? Without actually doing a high five. And in COVID times, really, it's a little difficult right now.
I did not see the question, everybody who's listening. That was completely not my question. That came from somebody else. I didn't tee it up. Josh, where can people get a hold of you? Where can people find out more information? Where can they leverage your talent and skill, and what's the best way for them to contact you?
The best way is to go to our website, Insellerate.com. There's a get demo, fill out information. One of our staff, one of our team members will call you. There's some information there as well. That's it. That's the easy way to get a hold of us. You can also you can email me, just josh@Insellerate.com. Like okay. John, you know, John has a commitment, and so does Nick, to their customers, and so do I. You know, we answer customers' calls on the weekends and so forth, because at the end of the day, one of the things we want to leave behind, I'm hoping people get this, and what maybe you said, Joe, is I didn't plug the product a whole lot. The truth of it is, our business, I did plug the product, because our business is helping lenders close more loans. That's what we want to offer and deliver to our lenders. It's not just, I'm not just selling you a CRM. We're selling you technology. We're selling you help. We're selling you a vision in the future within your company. So that is our business. It's to help lenders close more loans, to bring content like this, and to work with great lenders like JFQ Lending and McGlone and Homestead. Right? Both these guys have become friends of mine. I really enjoy working with them, and that's just the kind of relationships we try to build. So if you want to get a hold of us, go to Insellerate.com or just look at, email me at josh@Insellerate.com as well.
All right. Thank you very much for taking the time today. Please look out for it. We're going to send you a survey. We like to survey after this, of course. But really a great presentation today, guys. I can't thank you enough. And by behalf of me, as well as everybody at the Mortgage Technology and Marketing Committee, we thank you for taking the time. You guys really did a lot of work on your own to put this whole thing together, so we really appreciate that. And thank you for being a member. That was really awesome. And thanks for your time today.
Absolutely,
Thanks,
Joe.
All right. Take care, everyone. Have a great day.
Stay
Rock
safe.
with those rates.
Thanks.
All right.